Good morning, everybody. We're just going to wait a couple of minutes and just let everybody log in and get comfy. Hopefully you've all got a nice cup of tea or a cup of coffee. But welcome.
I'm on to my second cup of coffee of the day already. So it's telling.
I'm trying not to do caffeine, so I've been on water for the past 2 days.
That's great.
I know.
How are you finding it?
Yeah. I'm really looking forward to a cup of tea.
No headaches?
No headache. Yeah, it's literally just the headaches are terrible for it. So I've been trying to wean myself off it.
Impressive. It's one of my only vices, and I'm not prepared to give up caffeine
to give
just
that
yet.
up.
Yeah.
Fabulous. So we've got a few people joining us. I'll just give it another minute or so, and then we'll crack on. Perfect. Fabulous. So I think if we start, good morning everyone and welcome. Thank you so much for joining us today, and to those of you who've submitted questions for us, thank you. My name's Hannah. I am a commercial success manager here at Pluxee, and I've got about 10 years experience in the employee benefits and salary sacrifice industry. I've been lucky enough to work over at Halfords Cycle to Work and here at Pluxee as well. I'm thrilled to be joined by two of our salary sacrifice gurus and partners here today. We've got Danielle Adams from Halfords and Phil Gillespie from Tusker.
Thanks, Hannah. Hi, everyone. I'm Danielle Adams. I'm Senior Sales and Partnership Manager here at Halfords. I've been at Halfords for over 9 years now, always within our B2B department, supporting our client relationships. And then in the last 5 years, I've been in the employee benefits and salary sacrifice industry.
Thanks, Danielle. Hi, everyone. I'm Phil Gillespie. I'm the Head of Commercial Partnerships for Tusker. I've been with Tusker for around 10 years and have about 20 years experience in the employee benefits space, having actually previously worked for Halfords Cycle to Work for approximately 10 years. So sort of swapped 2 wheels out for 4, still very much a keen cyclist and very much in support of promoting those green sustainable benefits. For those who don't know, car salary sacrifice is a benefit which enables an employee to access a new or pre-loved car for an affordable fixed monthly amount, which includes insurance, servicing, maintenance, tyres, accident management, and lots of other additional benefits. We also promised a bit of an exclusive sneak peek today, and we wanted to share that we will be launching a couple of new products this year, which are all designed to complement the scheme. So we'll be launching a public charge card offering and also a domestic charge point solution. So that can all be bundled with the existing car salary sacrifice arrangement to deliver further benefit for the employee, but without additional work for the employer. So no additional invoices or contracts or anything like that. It was a really simple, straightforward. So back to you, Hannah.
That's really exciting. Thanks, Phil. Thanks, Danielle. So what I'm going to do today is I'm going to set the scene for what to expect, and we're going to ask our first poll question. So feel free to pop in any questions in the chat function that spring to mind during the webinar and into the chat, and we'll hopefully be able to have time to dig into those at the end. And if not, we'll certainly come back to you over the next day or so with answers and responses. So why are we here today, and why is this webinar worth your time? You can see the equation on the screen. Cost efficiency plus well-being equals resilience. And what's it all about? Why do we believe that this should be your new true north? Well, as we all know, the cost of employing people has risen for the past 2 years, and the cost of doing business is high. Pay increases in 2025 were at a medium of 3%, which is around 1.5% less than 2024. And with the outlook for 2026 also looking similar. Business budgets are tight and employee wages aren't working hard enough. and we all need to find a way to save money. And that's something we definitely all agree on, the need for cost efficiency. And what we'll explore today is where wellbeing fits into the equation, revealing the longer term consequences on simply cutting back on wellbeing benefits. And with the help of my lovely co-hosts, we're here to give you some real examples of how you can make cost efficiencies while enhancing your wellbeing strategy, and how this is the only sustainable road to business resilience. So, without further ado, we've got our first poll question. Is your business considering cutting back on employee benefits and wellbeing initiatives to reduce costs in 2026? Yes, we're making cutbacks. No, we will spend the same in 2025. We're looking to increase on spending, or we're still assessing our options. And what we'll do is I'll get my words out. We'll review these results of that poll in a few minutes. But next, I'm going to walk you through the employment and business landscape and what the current environment and circumstances mean for your business. For the last few years, we've talked about the employment landscape being in favour of the job seeker. When there's loads of choice, the business needs to stand out to its competitors. And while that still matters, the job market is less in favour of the employee. Hiring remains low. In 2026, hiring has slowed, with many holding off and filling roles until they find and understand how policy changes will truly impact them. Unemployment is at 5%, and that's the highest it's been since 2021 in the post-pandemic era. Lower employer confidence and high unemployment means that the competition for each role is intense, and yet the war for talent and the right skills is still prevalent. We have the macro environment here where hiring is slower alongside the micro environment of where the right skills, especially in tech, are missing. But the competition for top talent is still intense. We're seeing a higher rate of applications per role, but many employers are reporting that the quality of the candidates are few and far between. We're seeing a skill shortage. The tech and manufacturing industries in particular are both reporting that they are being impacted by skill shortages across the UK. Skills are short and the right applicants are lacking. So even if hiring is slow and competition is intense, retaining the skills for your business you have in the business is vital for resilience. So we're going to have a quick look at the poll results and my trusty sidekick over here. So what we asked is that the businesses are encouraging, is your business considering cutting back on employee benefits and employee wellbeing initiatives to reduce costs in 2026? Now, we've got a bit of a mixed bag of results here, and yes, we're looking at making cutbacks was 18%. 23% of you said that you're still looking to spend the same as in 2025. 14% are looking to increase, which is brilliant on spending. And the majority of you are saying that you're still looking at reviewing your options. And this is what we're seeing across the market in general. I know Phil and Danielle, you've probably seen something quite similar too.
Yeah, and I think certainly from our perspective, when we're talking to employers, we're seeing employers wanting to differentiate themselves, or at very least achieve benefit parity compared to their peer group and what they're offering employees. We're definitely seeing a trend of employers wanting to get more from their budgets and look at obviously reducing the impact of those NI rises. And typically we're seeing sort of 5 key themes in terms of driving those decisions. So cost is one. With Tusker, it is a cost-free employee-funded benefit, so that's a given. It is also a very tangible and sticky benefit, so employers are using this to support their engagement and retention strategies. Most employees are committing to a car for between 2 and 5 years. In fact, our average is around 44 months, so it really demonstrates an employee's kind of commitment to their employer. And of course, we've got employees that are now on their second, third, fourth cycle of car. We're seeing employers you mentioned earlier about the Employment Rights Bill. That is certainly a key consideration. Sickness, parental leave. We've actually made adjustments to our lifestyle protections, which is effectively a risk mitigation solution that we offer alongside the scheme to make provision for those key life events and ensure that neither the employee or employers is penalised in the event of those situations. Savings, as we mentioned, definitely a key driver. So a lot of employers are using the benefit as a way of reducing their NI costs. And then finally, we mentioned earlier about that kind of key message around ESG and sustainability goals that a lot of employers have. Often now they're kind of linked directly to executive pay and various things like that. So, a lot are using this as a benefit to help them achieve or help employees transition to greener mobility.
That brings us really nicely onto the question that we had from Magdalena, who asked us what the biggest trends are with budgets being cut. And Phil's answered that really nicely there with regards to looking at what we're doing with these NIC savings and that side of things. What we're hearing when we're speaking to our clients in particular, and what we strongly recommend is review as well. Review, what are you offering? What's not working? What is working? Is there something that you can cut out? If PMI is rising, for example, can you explore preventative health measures? One of the biggest causes of benefits and therefore investment wastage is that employees are not understanding the difference in their benefits and what they should make. So we really are looking to explore on how you use your benefits, and as a partner, we're helping drive better uptake. Let's take a look now at how the business landscape and how the current climate is affecting our organisational resilience. Employer costs are rising from April 2026. In April 2025, employers' NIC rose from 13.8% to 15%, making employing people more expensive. We've seen wage increases. In that same year, in 2025, the national living wage rose and the national minimum wage also increased as well. The 2025 autumn budget also outlined another increase, which will come into effect from April 2026. There was pension changes, salary sacrifice schemes came to the forefront as a way to reduce NIC overheads, and while plenty of opportunity still remains, UK businesses must also prepare for the £2,000 the NIC free cap promise for 2029. Phil also mentioned the Employment Rights Bill. The Employment Rights Bill updates are being staggered with change, and with some impacting your business more than others. From April, statutory sick pay will be payable from the first day of illness instead of the fourth, and the lower earnings limit will also be abolished, so more workers will qualify. Paternity leave will also become a day one right from April, removing the 26-week current service requirement. Unpaid parental leave will also become a day one right too. 0-hour contracts in early 2027, amendments to 0 and casual irregular hours contracts will also come into effect, leading to contractual and management changes. So what is the equation? We're not just trying to depress you here, and I know it's a lot to take in, but we're building a case for our new equation, and we're reflecting on where we are and what the current landscape means for your workforce and your business. But before we move on to the impacts, I'd like to get a feel for which of the elements that we've discussed currently are your biggest priority. So we've got another poll question for you. And the question is, which of these factors are currently your top concern in retaining your top concern? So we've got 4 options for you: securing and retaining skills, reducing NIC overheads, impacts on wage increases, or admin involved with the employer rights amendments. I'd really like to get your take on the next question, on the next section. So please feel free to share your thoughts in the comments after you've answered the poll, as we've got a mix of industries represented today on the webinar. So there's nothing better than hearing it straight from the horse's mouth. We're bringing together how the current landscape impacts your business, but the reality is that it's very varied, because alongside cost increases, there's also a variety of business rate support. And here's what we can say as a certainty: margin revenue, margin and revenue. Labour and employment costs are increasing and impacting labour-intensive sectors and reducing margins, unless businesses can recoup these costs elsewhere. We've got disposable income, tax threshold freezes, and high unemployment have reduced the amount of disposable income that households have, affecting their non-essential spending, such as goods and entertainment, all the fun stuff that we like to do. We've got operational risk and policies. How exactly will these policy changes be affecting our businesses financially and operationally? As the new compliance and taxation legislation comes into play, still remains to be seen. Employers, which leads us really nicely over to Phil, who's going to have a quick chat with us about how employers are differentiating ourselves.
Yeah, and I think that it just, everything you've just covered just really reinforces what I mentioned a short moment ago in terms of employers wanting to differentiate themselves, looking at how they can use benefits to enhance their offerings, looking at how they control their budgets and spending. The other key theme we're seeing is employers actually, because of the savings that are generated through car salary sacrifice, actually looking at this by implementing the scheme, looking at that as a means of widening and broadening their benefits program as a whole. So through the savings they're generating through car salary sacrifice, using that to enhance other elements of their benefit provision.
That's brilliant, thank you. Brilliant. So we've also got the poll results coming through. And before we take a look, I just want to have a quick look and see how you guys voted on your last poll. Most notably, the main question was, which of these factors are currently your top concern at the moment? And that the result that's come through overwhelmingly is that 60% of you are looking at securing and retaining skills, which is something that is of great concern for all involved. How are we looking to address that is what we're going to look at in the next part of the presentation. But let's have a look and see. But what's happening in your employees' world and your world too, even if you're responsible for rolling out these changes, you're also impacted by them as well. So pay increases versus inflation. The median pay increase in 2025 was 3%, which is 1.5% less than previous years. Experts predict a similar figure for 2026 and potentially dropping to 2027 as well. Whereas inflation is predicted to remain at about 4% for a significant portion of 2026, and this is negatively impacting financial wellbeing across the UK. We've also got concerns on redundancies. Personnel Today released research in June 2025 revealing that 20% of the participating organisations had already reduced their headcount since the employer NIC increases, and a further 33% had planned to, which is reflecting directly here in the most recent poll. We've also got the likes of increased stress. Unemployment is at an all-time high. The costs are rising faster than wages. We've got stress, burnout, and people are just feeling less secure in their roles. A Stress Ed survey from 2025 revealed that 91% of respondents experience higher extreme levels of stress, which can lead them to becoming burnt out, and incredibly unwell. So how do we navigate this? What does this all come down to? The impact on our workforce and our businesses. How do we navigate this? We've got a problem. We've got skill shortage. What's the solution? Do we look to upskill the current workforce? We've got a problem of cost efficiencies as well. With all of these changes evolving, what's the solution? Do we explore salary sacrifice schemes and benefit efficiencies? Pay increases as well. They're not keeping up with inflation. Total benefits value to maximise the amount of money that we can put into employees' back pockets. We've also got as we mentioned before, the increased burnout risk. Do we need to look at a holistic approach to wellbeing, embedding support across financial, mental and physical wellbeing? And we're going to dive deeper in this when we break down our True North equation. But I'm going to hand over to my lovely co-host now so they can kick off with some of the Mythbuster sections. And I'm going to do ladies first. So Danielle, over to you.
Thank you, Hannah. Yeah, so I'm going to go through some of the myths within cycle to work. One of the most common myths that we hear is that cycle to work is expensive to implement. But for every £1,000 an employee spends through the scheme, employers save around 15% in NI contributions. So as an example, if an average cycle to work application were £2,000 and the employer saving is 15%, that would equate to a saving of £300. In the scenario where 50 employees were to participate in cycle to work over the year at £2,000 each, this would provide total savings to the employer of £15,000. Then these savings would increase proportionally with more employees taking up the scheme. One of the other myths that we hear a lot is a low return of investment. Cycle to Work is a government initiative which offers the most cost-effective way to get a brand new bike and new cycling equipment. If your employer has joined Cycle to Work, the employee won't have to pay tax or national insurance on these items, which provides them with savings of up to 47%, which is huge. The reduced cost is then simply deducted from the employee's payslip via salary sacrifice over a 12-month period. On top of this, regular cycling is linked to better physical and mental health. Therefore, healthier employees tend to take fewer sick days and maintain higher productivity levels. This also reduces any indirect costs associated with absence, cover, and any lost output. Another myth we hear quite a lot is that cycle to work is difficult to administer. That is not the case at all. Our cycle to work scheme is really simple to administer. Pluxee offers a really easy and straightforward employee benefits portal. This reduces both HR and payroll manual workload. The cycle to work application itself takes around 5 to 10 minutes to complete with a step-by-step journey. This is then automatically connected to our Halfords system, allowing for instant certificate dispatch. This allows employees to receive their cycle to work voucher immediately. We also have our experts and dedicated cycle to work customer team on hand to support both the client and employee every step of the way.
Thanks, Danielle. I would certainly, continuing that theme, I think administration is a natural concern that a lot of employers have. And with Tusker, we've really moved away from that traditional kind of company car fleet model where you require fleet managers. Tusker is always kind of focused on delivering an employee-centric proposition. We've been doing this now for 16 years, with this being our core product. And we've got a team of nearly 400 people dedicated to delivering this one employee benefit. So that is all about having the respective specialists to support both our customers and employees at every single stage of the journey and remove that kind of friction points in administration. We provide a fully managed cost-free service that includes all promotional support, a dedicated bespoke employee platform by which employees can access the scheme, and we manage eligibility and affordability through that, in conjunction with Pluxee and the integration that we have with the Pluxee app and portal. And then ultimately, once we take an order, we support an employee at every stage of that life cycle: pre-order, delivery, and then in life. So we're signposting employees and really making sure that they feel they've got a handheld approach. Really short of approving applications, the employer still retains control over who does or doesn't participate. Processing the payroll reports that we provide and paying us, there really is very little for the employer to do. The next myth is around risk, and I'd say this is probably the most common reservation that we see. It is that what if. First and foremost, I want to stress that with Tusker, when we say cost neutrality, that's exactly what we mean. Only once a car is delivered is the first invoice raised, and that is then recovered on a monthly basis through the employee's salary. So it maintains that cost neutrality throughout. But when I mention that what if, it is the what if somebody resigns, what if they're made redundant, what if they retire, what if they leave due to ill health, all those things that Hannah mentioned earlier, linked to Employment Rights Bill, so long-term sickness, maternity, paternity. What Tusker have done quite simply is we've built a product that supports our car benefit scheme in the form of lifestyle protections. That makes provision for all manner of different life events that can and occasionally do happen during the term of the agreement. And in almost every scenario, a car can be returned to Tusker without any cost to employee or employer. So things like resignation or redundancy, so long as they've had that car for a minimum of 3 months, if they resign, if they make redundant, they simply hand that car back, and the risk sits with Tusker, not with the employer in that respect. Then in situations like maternity, long-term sickness, Tusker will actually step in and we will cover the monthly cost of that employee's car for the term of the agreement. So with maternity as an example, we will cover the cost of the car to an uncapped value for up to 12 months. So I know Leona had actually raised that as a question before the session, so hopefully that addresses your question, Leona, but if not, of course, happy to provide some more detail on our lifestyle protections. The next myth is that it only benefits the employee. Yes, it benefits the employer, but as I mentioned earlier, those kind of the sustainability agenda, CSR, supporting financial well-being, helping employees' salaries to go further. Not to mention the kind of the administrative support with Tusker doing the donkey work. And then finally, that it's a nice to have. And when I joined Tusker 10 years ago, that scheme was still in its relative infancy, but it has moved from that to be now very much a mainstream benefit that's offered by many of the UK's largest public and private sector organisations, from NHS to councils, from Tesco to Transport for London, from BBC to British Airways. We've seen a lot of employers now using this benefit and sort of seeing it as a staple benefit alongside those things like the cycle to work scheme. 27% of EV drivers say that the scheme actually directly influenced how long they stay with their employer, which is a really interesting stat linked to the fact that your poll results are going to suggest that retaining talent is so important to so many organisations. And then 60% say access to an EV scheme would actually influence their decision as to whether they would consider working for an employer. So that again is a really telling example. We know of examples where we've been told employees have turned down jobs because they didn't have those employers didn't have car benefit schemes. Maybe slightly extreme example, but as I say, the fact that it's happening really does demonstrate the value that some employees place on it. But back to you, Hannah.
That's brilliant. There's a significant number of myths out there, so I really appreciate you guys going through those and myth busting. And we see a significant number of myths out there as well, and we hear them over here at Pluxee too. And we've listed a few off here, but the main one that we do hear sometimes is that employees don't care about them, and that's just not the case at all. So 71% of employees are ready to leave their current workplace for better pay and benefits. And a strong employee value proposition really does help you attract and retain that top talent. Your benefits package forms a vital part of this. And if we go back to the previous poll, when we were looking at retaining that talent, benefits packages are definitely one that we need to look at. Employees use too many. This is a good thing. We want your employees to use them, what you offer them, and we want more support that you're giving them, leading to a higher return on investment for you as a business. Myth number 3, we don't need to review our current benefits. You should regularly review benefits to reduce wastage and deliver real value to your employees. We only need to communicate about benefits once. That couldn't be any further from the truth. Employees can forget. I'm rubbish at it sometimes as well, especially if you need to log into multiple places to access them. What you need to do is you also need to help adopt better spending habits for your employees, such as always checking whether you can get a discount or cash back before they shop. The more encouragement, the better it is for your business. We don't need a platform or a strategy. Unifying all your benefits into one place and streamlining the process reduces admin for you and your employees, and it improves the user experience tenfold. A strategy is also a must, and you're ensuring that you're offering the best benefits that can alleviate business challenges and help you achieve your business goals. You can't measure return on investment. You really can. Our Pluxee employee experience platform gives you a real-time usage data across all the benefits that you offer. You can measure the value of your offering and measure the return against a mixture of KPIs, including usage, absenteeism, and turnover rate as well. And what we're going to look at now is cost efficiencies. So we're going to hand over to Danielle and have a quick chat about that.
Great, thank you, Hannah. Yeah, so I just wanted to share what an employee had given as a testimonial who joined the Cycle to Work scheme. So they said that 3 months into their scheme that they saved over £200 in fuel and lost £6 in weight. The scheme for them was life-changing for them and their family as they all now cycle together and because of the change that they decided to make to an everyday task. What I think is really key here is that they said that this was life-changing for them. Not only have they seen the financial benefits, but their general well-being has increased too, which is really lovely to see.
Phil, I know
Thank you,
you've got
Danielle.
a good life story. I know you've got a good story to share as well.
Yeah, and it might feel like we're cheating a little bit with this one because we're actually quoting Pluxee's own head of commercial with this example. But I think it really is a great case study because the trend that we've seen there with Pluxee's own stuff, A, is that they're practicing what they preach, and B, that by offering this benefit, it's actually had a knock-on effect and snowballed with more and more employees joining the scheme because of the first-hand testimonials from their Tusker drivers. Ollie is a remote worker, driving over 15,000 miles a year, which is a decent mileage. He was naturally quite apprehensive about going electric. I'll testify to that. He took a bit of convincing, but he said now that he'd never go back, which really again speaks for itself. And I think beyond the tax efficiency of the scheme, he makes a really important point in saying that on average, it costs him just £9 to fully charge his vehicle on an overnight EV tariff versus 4 or 5 times that cost with fuel costs. And I think we often just look at the scheme, but actually it's the running cost where this can really make a meaningful impact on the employee's back pocket. Ollie's recently become a dad, and naturally with pushchairs and all those sorts of things it brought with it a need for a bigger vehicle, a safe, reliable vehicle. And actually, as we all know, that having children very expensive, so the fact that he didn't need to find money for a deposit, but was able to access a car he wanted that met his needs and could enable him then to budget effectively on a month by month basis, was seen as a real advantage. I think keeping with that theme of employee savings, I'm not going to suggest that every employee is saving over £40,000, but I've seen examples of employees saying this and much more. And the point here is that beyond the tax efficiency of the scheme alone, when we talk about how this supports financial well-being, it is enabling employees to salaries to go further because not only are they benefiting from tax efficiencies, they're benefiting from our full manufacturer discounts. We're part of Lloyds Banking Group, so we have phenomenal buying power. We also benefit from lower cost of money, so our funding rates are that much lower. And then we've got those fleet savings because we are putting such large volumes of green vehicles on the roads, which all bring down the cost to the employee. So what we're really saying here is that compared to with this example is an Audi e-tron, and acknowledge that if an employee, we looked at the same car on the same term on a like-for-like basis, and compared to a personal lease, the employee would have to earn an additional £40,000 in gross salary to be able to afford that identical car, same term, same mileage, on a personal lease. So it really demonstrates that there's nothing else like it in the retail market, and how much further it can help employees' salaries to go without a pay rise. Then we've got the message around employer savings, and I think when we look at Pluxee's clients, they're actually saving an average of over £4,200 per employee joining the scheme. So let's remind ourselves, this is an employee funded benefit, but that every employee joining is generating the employer over £4,200, even on a quite conservative projection. So we dial that back and we suggest that an average saving might be in the region of £3,700. That means that if just 50 employees were to take a car under the scheme, we would expect the employer to be generating around £185,000 in Class 1 national insurance savings over the term of the agreement. And these aren't pie in the sky numbers. I mean, I can cite a transport company that we're working with and launched their scheme in 2021. Based on the cars that they have on the road today, they are forecast to generate around £10.2 million in employer NI savings. And of course, there are people joining the scheme all the time that will add to that return on investment.
That's brilliant. Thank you so much, Phil, for taking us through that. And when we look at cost efficiencies and the need to do more with less, we need to ask the question, can employee benefits put more cash in our employees' pockets than a pay increase? And don't get us wrong, we will never advocate for giving benefits over a pay increase, and pay increases are still important. But when they're no longer keeping up with inflation because business costs have risen, we do need to look and explore in different cost-effective ways to maximise the total value that we can offer to our workforce beyond salary. So let's take a look at some examples to allow us to answer the question, can employee benefits put more cash in your employees' pockets than a pay increase? So looking at some average and generalised figures here, if an employee on an average salary of £34,963 receives a 3% pay rise, their net annual salary will increase by £459, which is £38 a month. If we take the same example for an employee on a £40,000 pay rise, £40,000 and a 3% pay rise will create a net increase of £864, which is £72 a month. And with an employee who's on £60,000 and a 3% pay rise will create a net increase of £1,044, which is £87 per month. The chart that you're seeing here is something that we've put together for a bit of a guide, and we'll share this afterwards as well for you, breaking down the average spending habits of a family of four, and all the ways that they could save on their spending through using a discounts platform. The figure that we actually estimate is about £1,617 of potential savings, and actually the average amount that people save each year using a discounts platform and cashback is £1,200. That's £100 a month back in employees' pockets, which, as you can see, is more than any of the pay increase examples that we've used. And as we can see, employee benefits are definitely a vital part of your cost efficiency strategy when employees are aware of what's available and what's maximising their use. The next part of the equation is well-being, and we've touched on financial well-being while exploring cost efficiencies, but we do need to think holistically as well. So let's set the scene by exploring what happens if we cut costs on well-being to reduce business overheads. The average absenteeism is 9.4 days per employee. That's nearly 2 weeks, and that's the highest ever. Burnout risk is at 91%. People take months off to fully recover from burnout. Mental ill health accounts for 41% of long-term absenteeism. And absenteeism is costing UK businesses about £400 million each week. 33% of 18 to 34-year-olds would leave their role if their employer didn't take well-being seriously. And these aren't just numbers on a screen. They impact your productivity, your morale, and your bottom line. So how can salary sacrifice support well-being? And I think Halfords are probably best placed to have a quick chat about this.
Great, thank you, Hannah. Yes, why does investing in wellbeing benefits help you on your patch to resilience? So firstly, to get fit and healthy, cycling is a brilliant way to support your overall health and well-being. It's an easy way to stay healthy, keep fit, and raise your immune system. It reduces stress. Cycling can boost your mental health. It's a fantastic way to reduce stress and improve your mood, productivity, and also your sleep quality. You save money. Cycle to Work is a simple way to save money, with savings on a brand new bike of up to 47%, plus decreasing any unnecessary spending on fuel, car parking, and public transport. You're also doing good. So on top of this, Cycle to Work is a great way to help the environment. By introducing cycling into your life, you can do your bit for the planet by reducing emissions.
That's brilliant. Thank you, Danielle. Phil, I know you've got some ways to enhance the employee wellbeing side of things over at Tusker.
Yeah, I mean, yeah, clearly this is a benefit that can support employee well-being in a variety of ways, not to mention driving those savings that we talked about earlier on. Saving money, when we actually look at an employee's financial expenditure next to their mortgage, a car is likely to be one of the biggest single expenses that they have, and often if car goes wrong, it can come at the worst time, and employees can potentially see themselves incurring financial hardship as a result. So this is a benefit that can support employees' financial well-being because they haven't had to find deposits, because employees can budget effectively with one fixed monthly amount for everything, and they don't need to worry about those kind of unforeseen running costs or issues with insurance premiums rising and things like that. We also talked earlier on about the fact of running costs in the sense of when compared to combustion engine vehicles, driving electric is significantly cheaper. All the main energy providers out there now offer EV tariffs. I'm with EDF Energy. I can charge my car for around £6 overnight fully, but most EVs can certainly be charged for under £10, which I don't know of anybody who filled their tank for £10 at the petrol station for a very long time. Reduce stress. I think things can go wrong with cars, and when it does, the cost can be considerable. So there's a duty of care consideration here in terms of enabling employees to access a benefit where they know the car is going to be kept on the road with access to accident recovery, roadside assistance, but also fully comprehensive insurance that includes business use by default. So if employees are using their car for work purposes, from a duty of care perspective, the employer has that peace of mind knowing that employees are adequately insured and going to be kept mobile. Financial resilience. I mentioned about that point around deposits. Don't think you can really underestimate that employees aren't having to find thousands of pounds up front to get access to a vehicle, and equally the employer isn't having to put up anything up front either. And that means that they've got extra money in their pocket. Hopefully they can actually use that money that might otherwise have been put towards a deposit to put towards a family holiday or something like that, so that can bring real satisfaction and enjoyment. And then finally, peace of mind. We have seen employers using this as a way of protecting employees' physical well-being. We launched the scheme for Transport for London last year. They have lots of employees who naturally are travelling during quite unsociable hours to their place of work. So actually having access to affordable vehicles, safe, reliable vehicles that can be used within the ULEZ zones and things like that was a key driver behind their decision to offer this benefit. So lots of great reasons supporting financial and physical well-being.
That's brilliant. Thank you so much, Phil and Danielle, for sharing how those salary sacrifice schemes can support employee well-being. And to wrap up this part of the equation, we're just going to reflect on the way that other employee benefits can improve employee well-being. So we've got financial well-being. Discounts and cashback help reduce the cost of everyday living, alleviating the impact of the high cost of living and the gap left due to stagnated salary increases. Financial advice and education, helping employees better manage their money and their budgets. We've got mortgage and investment advice, supporting for employees during crucial life stages such as buying a home or investing in the future. There's options for employee saving schemes. Deducting money from an employee's salary directly into an employer-run saving schemes ensures that employees can always set funds aside for the future. Salary sacrifice schemes, as we've learnt today, all the ways that EV and cycle to work salary sacrifice schemes can help enhance financial well-being for my lovely co-hosts. We've also got physical well-being too, so gyms and fitness discounts up to 25% discount. We've got 3,000 gyms, boot camps, fitness centres and online digital fitness. Danielle's already mentioned 100 different ways, as we've heard, with regards to cycling, getting you fit and reducing stress. We also work with an online GP provider, which is a digital health platform accessible from your mobile 24/7, 365 days of the year, which allows your employees to get in front of a doctor and on the road to a far quicker and healthier way than waiting to see an NHS GP. We've also got mental wellbeing too. So we work with the likes of the EAP service and access to information specialists for in-the-moment support and advice, plus counselling sessions available if needed. EAP also offers crisis support as well as dedicated menopause support services, which is becoming mandatory under the changes of the Employment Rights Bill. We've also got the likes of annual leave purchase, which is more time off for what matters most in equaling that better work-life balance. And the benefit also reduces salary costs as well, saving businesses money. We've also got peer-to-peer recognition too. And I always feel nice, warm and fuzzy when one of my colleagues sends me an e-card to say that we've done a good job, or just thanking me for having a quick chat during the day. It really does boost the employee experience, engagement, morale, and it provides a sense of belonging and loyalty. So how does this all come together? How do cost efficiencies and investing in employee wellbeing come together to create a long-term people and business resilience? In 2025, our HR team realised that by making a few small tweaks and changes on how we run our annual leave purchase scheme, we could really improve uptake and save money. What we did was we extended the number of days that you could buy a holiday from 10 days to 15 days. And we extended the repayment period to make it more affordable. And then we opened the application window a month early as well. And the results were absolutely fantastic. We had a 30% uplift in employee applications, and my colleagues absolutely love this benefit because they're always on holiday. We saw a 20% uplift in business savings to an amount that equaled 4.4% of our annual national insurance contributions bill. So that's offering more of benefit that improves our work-life balance and in well-being, generating a considerable amount of cost efficiency as well. We've also got an example of one of our clients who's a university, and they generated £187,000 in savings in 1 year using their green car scheme, cycle to work and annual leave purchase all combined. So that's 3 benefits that improved well-being and also generated a considerable amount of business savings. So Valerie, you asked us a question with regards to creative ways of offsetting what the government is intending to do with the salary sacrifice schemes, and it's only the NIC free cap, which is currently set for pensions, to change in 2029. As you can see, car schemes, cycle schemes, and even annual leave purchases are very effective in generating business savings and supporting your employees. Looking back at that same university client, they also reduced employee turnover by 2.7% over 2 years. So we're talking resilience, we're talking retaining talent, and we're talking on upskilling as well. Reducing the overheads that come with recruiting new employees. And it's continuity, it's loyalty, and it's satisfaction, and it's definitely resilience. So please feel free to pop in any questions in the chat. If you do have any questions, we'll be more than happy to pick those up for you. And as we've gone along, Zay, you popped in a question for us with regards to what are the 3 primary benefits that every business should be looking to offer in its workforce. And to be honest, I don't know about you, Phil and Danielle, but I don't think there is a one size fits all. And it's vital that you explore what you need and what your employees need and what your operational goals are. So when you need to look to speak to somebody like me, when we're talking about benefits, we can marry those 2 needs together, and we can mix the right level of benefits that will deliver the best return on investment for you as a business. Perfect. So have we got any questions in the chat? If you do have... Oh, go on, Phil, sorry.
No, you carry on. I can see we've got a question from Leona, but if you want to sort of set the scene, then I'll pick up on that next question.
Phil, if you want to take that question from Leona, you can carry on, not a problem.
And of course, anybody else who's got any questions, please do feel free to drop them in the chat. Happy to cover those off. Leona had asked the question about what happens if an employee's contract ends before taking out the car with Tusker. Pretty much up until the day of delivery, a car can be cancelled without any termination cost to employee or employer. With all manner of different life events and health-related life events, death in service, mental illness, terminal illness, loss of sight, loss of limb. If a car is delivered and that situation plays out at any point from the delivery date, the car can again simply be returned without any penalty or charge to the employee. If resignation and redundancy, they are the most common reasons cars need to come back to us before the end of the agreement term. In fact, so 9 times out of 10, it will be resignation or redundancy. We do require that the employees had the car for a minimum of 3 months. 3 months and 1 day passes and there is no charge to employee or employer. If the employee was to resign within the first 3 months, again, that would be highly unusual. I'd suggest that employee, when they're taking receipt of a brand new car, would hopefully be able to have that sight 3 months ahead. But if that was to happen, then they have signed up already to the fact that they agree to pay an early termination charge in that very unlikely situation. With Tusker's lifestyle protections, though, we do cap that value. It'll never be more than 6 times the monthly cost, but it actually reduces down to as little as 1 times the monthly cost. So again, doing everything we can to reduce and remove that risk for employees and employers. So hopefully that gives some comfort on those areas. The question was asked about what percentage of employees take up the scheme. That really is how long is a piece of string. A lot comes down to the organisation, what's going on within the workforce, like geography, demographics of workforce, and then a little bit of that X factor, a little bit of that, launching the benefit really well, getting the communication strategy right. If there's the right level of kind of internal awareness, appetite already there, it can really act as a catalyst for a highly successful scheme. Really, as a minimum for a private sector employer, though, we would be looking to try and support in achieving a minimum engagement of 10% of the workforce, but we have had schemes that have far exceeded that, and naturally there've been others that unfortunately haven't quite hit that mark. We've got another question about how much do employees save, and again, this is a really hard one to say. In terms of tax efficiency, the average saving over the term of a typical agreement is around £14,000 in tax and national insurance savings for the employees. But as I mentioned earlier, actually the far more realistic comparison is to look at, well, actually, what would that car have cost me outside of a salary sacrifice arrangement? And what that £14,000 doesn't factor in is the benefits of the manufacturer discounts that we're benefiting from, which can be up to 40% discount on a brand new car, the fleet savings, the VAT savings. All these things bring down the cost further for the end user, not to mention the no deposit. So actually mean the savings to the employee in reality are far greater than that, the tax efficiency alone. So hopefully that answers those questions.
That's brilliant. Thank you very much, Phil. We will leave it there. If anybody has any questions or needs to get in contact with us to discuss anything that we've mentioned previously, please do not hesitate to get in touch, and we'll send out some communication further. But thank you from me for attending, and thank you to Phil and Danielle, who have been absolutely fantastic today. Really appreciate appreciate all of your hard work that we've put together here. But yeah, thank you very
Thank you.
much.
Thanks for everyone's
you.
time.
Yeah, thank you. Thank you very much.
Brilliant.
Bye for
Thank
now.
you.
Bye.
Bye.
Cheers. Bye bye.